What's going on, everyone? Welcome back to Courtside Financial. My name's Obi, and if you're new to the channel, make sure you hit that subscribe button because NIO is very well documented on this channel. And also make sure you hit that like button because it really does go a long way in helping out the channel. So today we're going to be talking about NIO Stock. The stock is currently down 2.74% for the day and down 9.15% in the after hours. It is 4:30 a.m. so I actually got up super early to put out this video for you guys because I know a lot of you guys were asking for it last night. I was actually doing some work outside of this channel, so I had to go attend to that. But I wanted to get up super early to make sure that I got this video out to you guys on time. So once again, if you're new to the channel, hit the subscribe button and also hit the like button. So we have some mixed news for NIO. Yesterday they announced a proposed offering of 75 million shares. Share offerings or dilution is never the best thing, but sometimes it's a necessary evil. It helps companies raise the capital so they can be in a position to better execute on their goal. I've talked about dilution in NIO before, and I'm pretty much going to be giving the same message here, as my thought process has not changed. But a lot of you guys did want me to put out this video, and a lot of you guys were commenting to put out the video. So we're gonna go through this and we're just gonna go into detail on this one. So like I said, NIO's proposed an offering for 75 million shares. That's about 7% dilution to the outstanding shares already. And it could be plus or minus because they also gave the underwriters the option to purchase 11,250,000 shares. So that's going to be plus or minus. We'll just have to see what happens and if all the shares offered out during the offering are actually purchased. If you don't know, the underwriters are people who handle the transactions for a company when it comes to their offerings. So plus or minus 7% dilution. Now it's time for a case study. So let's look at what Tesla has done over the years. Here is a chart of Tesla's common stocks outstanding all the way up to Q1 2020. Remember that NIO is still a baby. It's still a startup. That's what makes it a risky company. That's what makes the stock so volatile. They're in growth mode right now. So if we look at Tesla's Q2 for 2016, they've increased their common shares outstanding by 10.6%. In hindsight, that wouldn't have stopped you from buying Tesla. And if that made you sell your shares in Tesla at the time, then you probably lost out on a fortune. The fact of the matter is that Tesla over the years has handled dilution in a way that's worked out well for shareholders. And I think NIO is actually learning a few things from Tesla and that they'll be able to do the same. I mean, when I made a video on NIO's dilution last time, I think I actually made 2 videos on it on this channel before, I ended up buying more shares. And trust me, I don't regret my decision one bit, but that's just my personal opinion and a friendly reminder that none of this is financial advice. So I think William Lee and the management team at NIO are actually really smart people. But why do I think this? Let's dig a little deeper into why they're actually selling the shares. Well, we can find this information under the use or proceeds section. So let's go over that really quickly. And by the way, guys, ir.nio is what you should be reading if you're an investor in NIO. Anyways, on the use of proceeds section, it says, we expect to use the net proceeds from this offering as follows. Up to approximately 600 million in US dollars to increase the share capital and our ownership of NIO China for up to an additional 1.9% by exercising NIO Capital's increase right under the shareholders agreement we entered into with the Hefei strategic investors and other parties thereto regarding the investment in NIO China, dated April 29, 2020. Such funds will further be applied to research and development of new products and technology and sales of service network expansion of NIO China. Up to approximately 357 million to repurchase equity interests held by certain minority shareholders of NIO China by exercising the NIO party's redemption right under the shareholders agreement we entered into with the Hefei strategic investors and other parties thereto regarding the investment in NIO China, dated April 29th, 2020, to increase our ownership in NIO China for up to an additional 8.6% as an accretive measure for our investors, and the remaining for research and development in autonomous driving technologies, global market development, and general corporate purposes. Remember the strategic investors from Hefei who helped the company and saved it from going under? Because NIO was facing financial troubles. NIO China, which is a separate entity, so now they're actually buying their stake back. In the Q2 earnings report, we found out that NIO's R&D spend dropped by 58.1% year over year. This left a lot of investors very concerned because as an innovative company, you need to keep on doing research and development so that you can stay ahead of the curve. So NIO is actually going to be using the funds generated from the sale of this stock to spend on R&D. So that's something that we actually need. NIO needs to be able to stay ahead of the curve. This is a new industry. Players are coming out with new technologies. We saw Xpeng just had their IPO, and they talked about how they have some really good self-driving technology. I didn't invest in Xpeng because I don't like to invest in IPOs. They're too risky. Pretty much every player in this space needs to be an innovator. You have to have the best technology. You have to put yourself in the right markets. NIO is also planning on breaking into new markets next year, so they really do have to know the market. So these things are actually important. As a long-term investor, I'm thinking about this dilution as just a bad red period. Growth stocks are super volatile. It's almost never all sunshine and rainbows. So even if you got into NIO a few months ago, you're probably still up on your position. What does a little drop in share price really mean to you? Paper gains and losses don't mean too much to me. It's not a loss unless I sell my shares. It's not a gain unless I sell my shares. I don't plan on selling NIO at all this year. Also, we can't forget that the August delivery numbers are likely to be released next week. So in my opinion, this management team is playing chess, not checkers. Lastly, the offering was at yesterday's closing, which was $20.44. You want to do these type of offerings when the share price is high, not low. NIO pretty much did it at all-time high. Dilution is never fun to talk about, but it's important to consider the facts before jumping to conclusions, in my opinion. So that's going to be it for this video. I want to know what you guys think. Make sure you hit the like button. Make sure you hit the subscribe button. Leave me a comment down below. And as always, thanks for watching.